Everybody. Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at some of the ticker symbols that were in play today. Okay, first up, let's take a look at DXTR. Okay, really nice move today, closed up 32%. RSI is now above 50 and in the 50 to 70 bull zone. We've got FASTO now above 80, so now it's back in the overbought power zone. We got to see if it can stay above 80. That's good that RSI is back above 50. We want to see it stay above that level. Plus DI is looking good here on ADX. So the bullish move today was the close above the closing price on the 20th. That was the key high close resistance level to break. The close above that level today is signaling continuation of the gap fill and signaling that the uptrend is intact. If you look at yesterday, the low of day, the bottom of the wick bounced off of the middle Bollinger Band, currently at 0.23. As long as that level holds, the uptrend is intact, and DXTR has more upside potential. If the middle Bollinger Band breaks, that will signal downside risk. Notice the candles have been holding EMAs 4 and 8 support higher, so this is a very nice uptrend. The upper wick in today's candle almost filled the gap. Notice there's a gap between low of day on this candle and high of day on this candle, and so once the first red line is hit, that's going to fill the gap, and then just above that's the 50-day simple moving average, currently at 0.42. That is going to be the key level to break. In order to head higher, DXTR is going to need to close above both of these red lines and above the green line to put the next resistance level target on deck. And so we're looking for a potential close above the 50-day simple moving average to put the 100-day simple moving average at 78, and the current the previous support zone back here, there was some good support, around 70, and so that's going to be another key resistance level to break if the share price does break above the 50-day simple moving average. Notice there was a giant volume spike today, so there's really big volume behind the move. If you take a look, there was a declining volume pattern. Notice the declining volume pattern as the share price consolidated. That was setting up the bullish volume spike. Today there was the bullish volume spike with the push through resistance. That is exactly what the bulls want to see to signal more upside potential. Also notice the very low volume yesterday. That many times you see that on a pullback, and this signaled that the sellers had tired and just needed some buyers to step in. Holding the middle Bollinger Band was key on this chart. If we take a look here at the 15-minute chart, this is a chart we'd been working on in the chat. You could see that we were wanting a break above 33 today. That was the high close from back here on the 22nd. And so the candles worked their way up to that level, consolidated, and then right here at 1 o'clock, they broke above that level, and that was signaling more upside potential, and that set up the run to high of day. Now the candles pulled back into the close, but they did hold the middle Bollinger Band. That's going to be the key level currently at 34. If that breaks, you want to see 33 hold. That was the big resistance level from before. We want to see that turn into support. All these candles hitting that level should provide support if it is tested. If 33 breaks, you could see a big drop back down to the 29 to 30 range, down here where the 50 and 100 simple moving averages are. On the upside, what you want to see if you're a bull is a break above the high close, which is at 37. And so if the share price can get above 37, we're going to see a continuation of this run in the 42, with the 50-day simple moving average on the daily chart being the target. So keep in mind, many times when a gap is filled, it is a climax, and it signals a top, a temporary top. So it's going to be really bullish if it can close above, and if it pulls back and closes below the 50-day simple moving average on the daily chart, that could signal consolidation is coming. Okay, let's look at RNVA. Okay, this chart is heating up. Okay, we've got this RSI here above 30, and now what we want to see is a break above 50. Okay, so it's at its highest level in quite some time, and FASTO now is above 50, and in the 50 to 80 bull zone, that's exactly what we want to see. There was a nice crossover on ADX here with plus DI crossing minus DI to the upside, and then also ADX is crossing minus DI as well, and so this is a signal the bulls are heating up. Okay, so there was a nice move today, but there was a pullback off of high of day. Notice the upper wick tested this 50-day simple moving average zone, didn't get there, but it pulled back and it formed this long upper wick in a spinning top. Okay, this is signals dilution, possibly profit taking. You know, the share price could have been pulled back for people to load. The key on this chart is going to be the middle Bollinger Band. Okay, that's at 0.385. As long as this dotted purple line holds, that's going to signal more upside potential. There was a close above that level on Monday, and that was a signal that the chart was heating up. Now we want to see the middle Bollinger Band hold and a new uptrend begin. You notice the upper Bollinger Band is hooking up. There's a descending resistance line, this red line here. That's going to be the key level to break. If it can break above that level tomorrow and hold and get above 50, then the 50-day simple moving average is our target. Notice the close today was above the middle or above the upper Bollinger Band. The Bollinger Bands are super tight, signaling a possible bullish change in trend here with the break above. Notice how for the entire month of June, RNVA has been consolidating sideways, and so this break today was above high close horizontal resistance. That's the highest close since the drop, and so many times when that happens, that's a signal of the break to the upside. We don't like to see the long upper wick and the black candle form, so hopefully it can reverse the pullback from intraday and continue the new uptrend on the daily chart. So keep an eye on RNVA. Take a look at MBRX. Okay, this is a stock that's been on a big run. It's now overbought on RSI at 89. Okay, you've got Fasto corrected from being extremely overbought, still above 80. You've got this parabolic move on plus DI, and then today the big climax that happened was hitting the 200-day simple moving average at 214. That is going to be the big level to break. Notice the share price crossed that level intraday and then pulled back. Okay, so that was a signal to lock in profits. It's got to get above that level to head higher. If you look over here, the 300-day simple moving average is undefined, so this is the top simple moving average resistance level. Okay, it's a big move back up to these current resistance levels. If you can break above 214, 240 and 270 are going to be the next two big levels to break. On the downside, if the share price does consolidate, notice today's candle formed well above the upper Bollinger Band. It's all the way down here at 153. Many times the candles will work their way back into the bands when this happens, and if that happens, look for a pullback to 153, 152. That would fill the gap. Notice there's a gap between high of day yesterday and low of day today. So if the 200-day simple moving average fails to break, that gap is likely to fill, and then the gap fill would create a nice bounce play opportunity. So right now, with this hitting the 200-day simple moving average after a multi-day run and a giant volume spike, which looks like a climax spike since you have a pullback from high of day. Notice like this candle right here, it hit the 50-day simple moving average, long wick, big volume bar, red candle the next day, or red candle, red volume bar the next day. So you have a similar setup here where you have a pullback from the 200-day simple moving average on a big volume spike following a multi-day run. Odds are a red candle forms tomorrow. Look to play MBRX on the bounce after the gap fill. Okay, take a look at SHIP. This is a marine transportation stock that has been doing excellent. I know a lot of people love to talk about DRYS, and we're going to show that chart next. But for you DRYS traders, this is more what you're looking for, right? This had the huge move off the bottom. Okay, it hit 60. The candle right here on June the what is that? June the 9th was telling you that a new uptrend was possibly starting. We actually put out alerts when this happened. You know, there wasn't a lot of volume. Notice how low the volume was, and so we put out alerts, and it was like trading sideways. And it just wasn't that exciting. There was no volume. It was just kind of going sideways. Nobody was really interested in it. And then finally last week, it made this big move above the 50-day simple moving average. There is a gap between the high of day on the 20th and low of day on the 21st. So if the share price does pull back, look at that level as a target for a pullback and a gap fill. If the share price continues pushing higher, okay, we're looking at this 110 level here, which is the high close on the first week of April. If you notice here, the break above the 50-day simple moving average was on a volume spike, and that was signaling more upside potential, and it just hasn't stopped since. It busted above the ship got above the $1 level. That's a huge level in penny land. So you want to see that level turn into support. You want to see that level hold. Notice how it was big support back here in February and March, and so we want to see that level hold. It could turn into big resistance. If it pulls back, you could see a pullback to the 100-day simple moving average. Okay, a really big pullback. That little gap back there, you never really like to see that on these penny stocks because they create targets for the market makers to fill in the future. If you look right here, there was a gap here, this gap up open. Look how it came down, almost filled it, went sideways, came down, filled the gap. Gaps usually fill on penny stocks, so that makes this suspect that this can be a sustained run, but we will see. This is a very nice move. The candles are riding EMA 4 support higher. Volume has been increasing. We could get some kind of climax spike tomorrow. It didn't quite get that climax spike today, but we do have overbought levels on RSI at 80 and Fastos at 93, so there's not a lot of juice in the tank here. So if it fails to get above 110 tomorrow and start stalling out, look for a potential pullback. If it gets below $1, you're going to be wanting to look for to play this on after it consolidates and look for that 100-day simple moving average for a possible reload. Okay, let's look at DRYS, DRYS. This stock has been on a huge downtrend. It's been just crushed because they can't stop selling shares. They keep on buying big boats, spending millions of dollars, but for some reason people keep buying the stock. It's pretty crazy. People are perpetuating this, and they keep on trying to catch the falling knife, and it happened again today. All these white candles here are reflections of people trying to time the bounce. That more than likely on each of these days somebody got burned because there's no upside. It just keeps going, and so today there was a nice bounce. People are getting excited again because many people are underwater. People average down. The big thing on this chart is EMA 4. Look at the pink line, 292. Okay, there was a close above back here on the 13th that failed to hold, and the downtrend continued. So how we like to play these kind of death spiral financing dead cat pounce plays, the riskiest possible trade you could make. This is it right here. If you like danger, this is danger, big time danger. This is for the people that have money to lose. Okay, so you have to be a really good trader to pull this off. But if you look at, watch EMA 4 here at 292, if it can break above that level, then that could be a signal that there's more upside potential, and we'll be looking for a possible run up to EMA 8. There could be some nice percentage gains between those two levels. Okay, so if it fails to break EMA 4 with the close above, that's going to signal downside risk. Okay, the chart is heating up with the candle today. The candles are just working back into the bands. There was a 9% gain. That is nothing compared to how far this thing has dropped, but we know how DRYS can get going, and what we like to say is there's no bad stocks, just bad entry and exit points. Every dog has its day, so when DRYS runs, you don't want to miss it. You just want to get in and out with the quickness and be sure not to get caught holding the bag. Okay, let's take a look at OWCP. This is an over-the-counter stock. They're based out of Israel. They had some good CBD news out today, some patent news. Just check it out. They had a good PR today. It created this bullish move in the share price, but it sold off. Look at the long upper wick, huge pullback from high of day, and we were looking for a close above the 50-day simple moving average at 0.734 and above the top of this channel here, which the high close resistance level is the 31st of May. And notice how it closed below both levels. In order to head higher, it's going to have to close above both levels, and that would put the 100-day simple moving average on deck. If it's tomorrow, what we want to see is we want to see this gap fill. Look how there's a little gap between high of day yesterday and low of day today. That gap fill could trigger a nice bounce, and then an intraday bounce, and then a push back above the 50-day simple moving average. There was huge volume today. There was good news. It's right by the middle Bollinger Band. This new uptrend is just trying to begin right now. So the pullback, obviously obviously they were selling some shares. The bulls are they want to see that people were loading today and looking for higher levels. If the middle Bollinger Band's got to be the stop loss level. If it breaks below 0.644, you do not want to be holding, because that would signal continuation of the sideways pattern in the downtrend. This play is going to be a good play if it can get above the 50-day simple moving average. So keep an eye on it. It looks like it wants to do something. Okay, take a look at FRZT. Okay, this is the Garfield Go play. It had the epic run from down here at it started at the bottom 0001 on the 2nd of June, and it ran up all the way up to a penny and a half. So it was a monster percentage gainer, and then it's pulled back. And it's had these little bounces, but it's failed to retrace. It's had this Fibonacci retrace off the high, and it's pulled back, and you've got this nice retrace, but it's yet to have a bounce back above the EMAs. And so if EMA 4 continues to be resistance, that's going to signal more downside risk. Notice today a doji formed. The doji formed following a red candle in a downtrend and a gap down open. That created a bullish reversal pattern. It created bullish doji star. Keep in mind a doji, when formed during a downtrend after a gap down open, sets up a really strong reversal pattern. A doji signal bounce, and so this is set up for a bounce. The key level to hold below is the 50-day simple moving average at 0.0017. If it breaks below that, you could see a big drop down here to test 0.0001 and the triple O's. It could be back down in triple O's. So this is the level. If it's going to bounce, it's going to do it in this zone. It's got to hold this 0.0017 to 002 level, and then we're looking for a close above EMA 4 at 0.0029 to signal the chart is heating up, and then to get going again to the upside, it's got to close above the middle Bollinger Band at 0.0040. Those are the two big levels. 3 and 4. If it can get above 0.003 and 0.004, then you're talking about a possible bounce and run back up to test Pennyland. Fail to get back above EMA 4, and that signals that this downtrend will continue. Okay, so keep an eye on it. Look at the declining volume pattern. Remember what we were talking about the other play earlier, where there was declining volume and then the bullish volume spike came in. So for DXTR, notice declining, got really small, and then boom, volume spike. Notice the declining volume, it happened when the stock share price was consolidating. Okay, and so now you've got a similar pattern with the declining. The everyday volume's a little bit lighter. You're shaking out all the weak hands. All the sellers that wanted to get out got out. The market makers have flushed out everyone, and then now it's time for the bullish volume spike and the push through resistance. If Fritz is going to bounce, it's going to happen very soon. Okay, so keep an eye on it. Thank you very much for viewing this chart. If you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.